Hi and welcome to this video. In this video, we'll be writing accounting equation for few transactions. This is a series, and in this series, we've already covered two videos. In the lesson number 1, the concept was explained, like what is the accounting equation, and in lesson number 2, we had written an accounting equation for one transaction. I would recommend you to watch these two videos after this video, as it will help you understand this video better. In this session, we will be writing accounting equation for these transactions. To keep it easy and simple, I have picked up only cash transactions. I will be covering credit transaction and writing accounting equation for that in the future videos. So what would you learn in this session? Well, by the end of this session, you will be able to read the transactions and identify the two accounts involved in it. Accounting is based on double entry system of bookkeeping, and as per double entry system of bookkeeping, every transaction has two aspects, a debit aspect and a credit aspect. What to debit and what to credit is what we would learn in future videos when we'll be doing rules for recording the transactions. Right now, we're just trying to read the transaction and identify the two accounts involved, and then the next thing that you would be able to do is to write an accounting equation for this transaction. So this is our first transaction. I will go very slow so that you can understand whatever I am saying. So the first transaction is started business with cash, and the amount is 40,000. Let's assume there's a person over here, this gentleman. He has started this business and invested money into the business, which is 40,000. So whenever the owner is going to invest money into the business, it is referred as capital. And this capital has come as cash into the business. So the two accounts over here is, one is cash and the second one is, how did you get this cash? It is capital. Now let's write the accounting equation. So whenever you're writing accounting equation, you should create a table like this. In the first line, you would write the accounting equation, which is asset is equal to capital plus liabilities. Now a business can have multiple assets. So you should always write the name of the asset over here and then the value over here. And then under capital, you would write capital, and under liabilities, I have just written liabilities, as in this session, I am not really looking at the liabilities. We are taking only cash transactions. So in this equation, you have assets, you have cash, which is 40,000. Now that's the only asset. That is equal to, and capital is 40,000 plus liabilities, which as of now are nil. Now let's move on to the second transaction. The second transaction is purchased inventory or goods with cash, and the value is 10,000. Now this gentleman thought that he needs to have some object that he will sell and generate revenue from it. So the object that he's going to sell, or a business sells and generate revenues from it, is termed as inventory. So he bought inventory with cash. If you're doing IGCSE, the term that you would come across is going to be inventory. And if you're doing CBSE, ICSE or any other Indian board, the term that you would come across is going to be goods. So purchased inventory with cash 10,000. Now let's identify the two accounts involved over here. So the first account over here is, what did he buy? He bought inventory. So that's the first account. And the second thing, how did he pay for this inventory? He paid by cash. So in this transaction, the two accounts are very, very clear. One is inventory or goods, and the second is cash. Now let's see how our accounting equation is going to look like after this transaction. Whenever you're writing accounting equation for each of the transaction, you'll have to create a new table. So here is the table after this transaction. So at the top, I have written the accounting equation, which is assets is equal to capital plus liabilities. Now the business has bought inventory, and inventory is an asset. It is a resource that would be used for the purpose of generating revenue. Therefore, it is an asset. So under the assets, I'm going to add one more column, because one more asset has come over here. Now the business has two assets. One is cash and the second one is inventory. So let's see what our equation is. So our equation is assets, and under assets we have cash worth 30,000 and inventory worth 10,000. Now we bought inventory worth 10,000 and we paid by cash. Therefore our cash has gone down by 10,000 and inventory has increased by 10,000. But our total assets continue to be 40,000. But this time 30,000 is cash and inventory is 10,000. Now this is equal to capital, which is 40,000, plus liabilities, which is nil as of now. Now let's move to the third transaction. The third transaction is purchased furniture with cash and the amount is 5,000. So this gentleman bought some furniture for his office, his business, and he paid with cash. So which are the two accounts involved in this transaction? So the first account is going to be furniture, because what did he buy? He bought furniture. And the second account, how did he pay for this furniture? He paid by cash. So the two accounts involved in this transaction are furniture and cash. Now let's see how our accounting equation is going to look like. So for this transaction also, you will have to draw the table all over again. In this transaction, the business has bought furniture and furniture is an asset. Therefore, you will have to add one more column over here under assets. So now the business has got three assets: cash, inventory and furniture. And the total of this has to be equal to capital plus liabilities. So our accounting equation is assets, and under assets you have cash worth 25,000. Now cash became 25,000 because you paid for furniture, which was 5,000. In the previous transaction, it was 30,000, but as you've bought furniture and you paid with cash, that is 5,000. Therefore, your cash has gone down. So our assets are cash 25,000, inventory 10,000 and furniture 5,000. And the total is 40,000. Now this is equal to capital, which is 40,000, plus liabilities, which are nil at the moment. Now let's move on to the last transaction. Now this gentleman thought that he needs some machinery for his business. So he purchased machinery with cash and paid 10,000. So what are the two accounts involved in this transaction? So the first account is machinery, because what did he buy? He bought machinery. And how did he pay for the machinery? He paid by cash. So the two accounts are, one is machinery and the second one is cash. Now let's see how our accounting equation is going to look like. So this is how our accounting equation is going to look like. Now machinery is an asset. Therefore, under assets, we'll have to add up one more column over here. So now the business has got four assets: cash, inventory, furniture and machinery. And the total of all these four should be equal to the total of capital plus liabilities. Now the machinery was of 10,000 and he paid by cash. Therefore, our cash over here has gone down by 10,000. So it was 25,000 in the previous transaction. Now we are left with only 15,000 in our hand or in the books of business. So let's see what our accounting equation is. So it's assets, and under assets, cash 15,000, inventory 10,000, furniture 5,000, machinery 10,000, and the total of this is 40,000, which is equal to capital, which is 40,000, and liabilities, that is nil. I hope you have been able to understand the concept of accounting equation. In case there are any doubts or any questions, you can leave them in the comment section below. If you found this video useful, give it a thumbs up and subscribe to our channel. And do remember to press the bell button to stay notified about all our future videos. Till the next video, bye-bye.